this is the main reason day traders fail. I've been working with coaching traders since 2013, and I've seen this happen over and over again, and it happens to me all the time. And it's a temptation that you must resist, because if you don't, as you're gonna see with proof, it's gonna get you in a whole lot of harm. So I'm gonna illustrate this to you with some of my personal results. That way you know that I'm not talking to you in theory. Well, I read in a book once, or I think this is how it's supposed to work. No, you're gonna see how this all plays out. And the reason most day traders, the main reason most day traders fail is because of bad habits that at the time don't seem bad. In fact, they seem like a very rational habit. They seem like a good habit, and there's justification for feeling so, which is what I want to show you here. So the justification of a habit. Now, to set this best up, I want to walk you through a trade here. Well, you'll watch the trade play out, but just understand I am shorting the stock. So for you beginners out there, what that means is I want to see prices go down. Believe it or not, you can make money when prices are going down. That is known as shorting a stock or being short a stock. So prices going down, that is a good thing. If prices go up, that is a bad thing. So with that context out of the way, let's see how this first trade plays out.
Watching 250.50 here for a short, in at 250.50. Let's see if this thing can get some downwards pressure now. I am short, so for you beginners out there, that means I will make money if prices go down, but if they go up, I will be losing money. So let's see what this wants to do. Right now, not looking so hot, but want to give it a little bit more space. Right at that trend line, so we'll see if we can get the trend line to do its job once again and reject the price back down. We'll see. Battling right up at that area. I know it's all right. I got to get out now. All right. Well, bummer. Thought that thing was going to roll back over, and it still might.
So as you saw, price came up. I had to wave the white flag, and I got stopped out right there. But then do you notice what happened next? The price came all the way down in my favor. And I'm just going to say this to keep the numbers nice and even. But let's say I had played that essentially perfect. That would have given me $1.50 per share in my pocket. And again, $1.50 per share. So that would have come out to be a very, very nice trade. So let's think about what is the habit here that is rational to say? The habit would be, well, you know what, Clay, had I just held, that would have been fine. You know, I get it. I'm trying to mitigate my, control my losses and be disciplined. But had I held, I was right. The price did want to come down, and it did come down. So you know what? I need to be a little stronger. I need to have stronger hands. I need to hold next time because, hey, it came down. And once again, to reiterate, everything I just said there is completely logical. It's rational based on what happened. Yes, the price did come down. Then I go on to make another trade. So let's see how this one goes. And once again, I am short, so I want to see those prices go down so I make money. Let's see how this trade turned out.
Potentially take this break to the downside here. Watching 249.50. In at 249.50. So let's see this thing get a break of this pattern here. Hesitating a bit more than I'd like, but let's give it a chance. Okay, starting to get some movement. Ended up getting out. It broke, came back up, and I just can't risk it right now where I'm at.
So as you just saw there, I ended up just getting out right there for a small gain. It was not looking good. It was, essentially starting to go against me, and it just did not really seem to be what I wanted it to do. So I decided, you know what, I just need to hop out of the trade. However, let's now apply the first half that I talked about. Let's apply the rationale of, yeah, it's not going well, Clay, but the last time it didn't go well, but you just held strong. Everything turned out to be just fine. In fact, you made $1, you would have made $1.50 per share. So let's put that into this. Let's put that habit into play here. Though, let's just be strong, Clay, be strong, and let's see how this all would have turned out. So next you can see, and again, I was short, so that's where I want to see prices go down. And as you see here, prices are not going down. Prices are not going down at all. And the prices pulls back a little bit just to return back upwards and go even higher. Now, I don't want to take, the worst case scenario and say, oh, and you would have gotten out at the, at the peak or anything crazy. I want to keep this very modest. And that level up there is at essentially the 254.50 mark. So think about this. What did I make during this move right here? This habit right there would have made me, as I said earlier, $1.50 per share. But what about this move right here? The habit that I thought was good. That right there would have cost me $4, maybe even more. I'm being conservative here and saying that would have cost me $4. So do you see the math problem here? Yeah, that one right there would have led me to $1.50. But on that very next trade, had I applied that very same logic, not only would that $1.50 have been wiped away, I would have been absolutely crushed and taking an even bigger loss. And that's what gets traders. It's those bad habits that you don't know are actually bad until it's too late. And then you compound that with the fact of, and I mentioned earlier, it's always trying to happen. And it tried, right? The market tried to sucker me in. And I took a loss. It was a losing day, but I supposed to pat myself on the back a little bit. At least I didn't allow the market to whisper in my ear, Clay, if you would have broke your rules last time, you would have been fine. Clay, be strong. If you would have, be strong last time, it would have worked out. Do you have those voices? I know I have those voices. If you don't think you have those voices, then I'd encourage you to, are you sure you don't have those voices? Because it's those voices that whisper those sweet nothings into your ear and allow you to either form bad habits or allow those bad habits to crop back up again. And that's the problem with bad habits, is they're a habit, but they're bad. And habits are, well, habits, but you gotta learn to push those habits down and not allow them to come into motion. But it's very hard to do, because to circle back, once again, it's not like a habit is something that's irrational, because that wouldn't be very convincing. If some do this irrational thing, well, no, that's not. That's easy to say no to. But when the habit is saying, hey, your last trade, you would have been fine had you just held and hoped, had you just been strong. Well, then the very next trade, as you saw, would have gotten me absolutely crushed. So that's why traders fail. That's why traders get knocked out of the game, because of these bad habits that pop up, or they just get cemented and they never quite go away, and you have to be very, very leery of it. But as not fun as it is to lose money as I did here, I'm really glad that it happened. It happened live so that I could make this video, because this is such an important lesson where all it takes is just one of those trades where you can break rules and break more rules and break more rules. And in all those situations, those rule breaks can lead to profit, but all it takes is one, just like that, as you saw here. And all those rule breaks can be wiped away and then some, and then it can put you in a downward spiral, and it's just not a good situation to have. So be aware of those habits. And more specifically, is this habit actually a good habit, or is it one of those hidden bad habits that you just don't quite know before it's too late? So be proactive against these and don't let them jump up into your trading. So I hope this helped. I hope this, shedding more light on how, the human mind works and how the human mind can seemingly be logical, but then lead you right into the buzzsaw. We want to avoid the buzzsaw as traders. If you found this video helpful, hit that like button, leave a comment down below. Check out the channel as a whole if you like what you see. I would love to have you as a subscriber to the channel, so definitely hit that subscribe button. Everybody, thanks for watching, take care, and avoid those buzzsaws. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.